Namaste, good evening. A session where our primary intention is to complete assessment of individual and if possible to do some other arenas also. But at the beginning itself, I want to tell you that this will be a shorter session for two reasons. Or rather, one main reason that from tomorrow we are going to start our journey into international taxation of 4 sessions. I need some preparations to be made to ensure that our timing is saved in the classroom. So for that, I need some time. So I thought I will complete the session today little early so that from tomorrow we are able to focus upon. Right. And that is the core marks which we are going to get. My intention is 25 out of 30. We should somehow get it there. Okay. Question number 4. We have completed up to question number 3. Question number 4. Mr. Manaksha, a resident, sold a residential property for 2.90 crores, okay, for 2.90 crores on 17th August 2020. The stamp value on that date is 3 crore. He paid commission of rupees 1 lakh. The said property was acquired on 23 lakhs in August 21. Using the sale proceeds, he acquired a building in September 2020 for rupees 1.2 crores. The stamp value at the time of acquisition of the house was 1.4 crores. This acquired residential property was let out for a rent of 60,000 from October 2020. In September 2020, he sold a vacant land for 40 lakhs when the stamp value was 50 lakhs. This land was acquired in 2016, so more than 2 years, for 7 lakhs. The sale consideration of 40 lakhs were distributed to spouse, major son, married daughter and minor daughter equally. They had deposited and earned an interest of 1.80 lakhs each. Compute the income and the tax liability. Basically, we are checking on capital gains plus something interesting to understand. Okay, first we will see sale of residential property and sale of land. We will do the working notes and then progress. Okay, working note for sale of residential property. Working note for sale of residential property. Full value of consideration. In that, actual consideration is 2 crore 90 lakhs. Actual consideration is 2 crore 90 lakhs. Okay, 2 crore 90 lakhs. Okay, stamp value, okay, is 3 crores. Okay, 110% of actual consideration is, okay, since stamp value does not exceed 110%, actual consideration will be treated as FVC, full value of consideration. So I will take the actual consideration of 2 crore 90 lakhs. Okay, less ICOA. When was this purchased? Okay, he paid commission of 1 lakh. Less cost of transfer. Net consideration. Okay, 2 crore 89 lakhs. Net consideration 2 crore 89 lakh. The said property was acquired in 2001 for 23 lakhs. Less ICOA 23 lakhs into 301 by 100, 2001 to, so 23 lakhs into 301 by 100. Gross LTCG. Gross LTCG is 2 crore 19 lakhs. Gross LTCG exceeds 2 crores, so he can claim the benefit of section 54 for only one property. Gross LTCG exceeds 2 crores, so he can claim the benefit of self-occupation only for one property. Fortunately, okay, there is only one property which is acquired by them. Using the sale proceeds, he acquired a building for 1.2 crores. Okay, exemption under section 54. Exemption under section 54. Gross LTCG, that is 2 crore 19. Okay, or amount invested to 1 crore 20 lakhs. Amount invested 1 crore 20 lakhs. Whichever is less, so 1 crore 20 lakhs. Okay, taxable LTCG, taxable LTCG is approximately 99 lakh 77,000. Okay, taxable LTCG 99 lakh 77,000 from residential land, from residential house property as sold. He will get a taxable LTCG of, okay, suppose in the question, in the examination, they give you two properties also. Take for only one property, whichever is higher, you will take it because the gross gain has exceeded. Okay, now let us do the same thing for, the land he has sold in September. Let us do the same thing for working note for sale of land. Working note for sale of land. How does this work? He sold a vacant land for 40 lakhs. Okay. The stamp value on that date is 50 lakhs. The stamp value on that date is 50 lakhs. Here, since stamp value exceeds, okay, it is, since stamp value exceed 110%, okay, stamp value will be treated as full value of consideration. So you will take 50 lakhs. Stamp value will be taken as full value of consideration less, okay, stamp value. This was acquired in 2016, April 2016 for 7 lakhs less ICOA, okay, 7 lakhs into 301 divided by April 2016, my dear friends. April, the question says April 2016. So CII value will be April 2016. 16, 17 is 264. 264. Okay, it will be 264. Repeating, 7 lakhs into 301, 7 lakhs into 301 by 264. 7 lakh into 301 divided by April 2016, that is 16, 17, 264. Okay, 264. It is a long term because 16 means 2 years only, so it's a long term capital asset. Taxable LTCG on land. Taxable LTCG on land. Okay, 42 not 1 894, 42 lakhs 1,894. Computation of capital gains. Computation of computation of total income. Computation of total income. House property, because there is a let out property. Okay, the acquired property was let out for 60,000 per month from 1st October 2020. Okay, right? Rent for 6 months. Okay, so 60,000 into 6 months. Okay, this becomes the NAV also. They have not given any municipal taxes and all. Okay, standard deduction at 30%. Standard deduction at 30%. So our house property income comes to 2,52,000. Our house property income comes to 2,52,000. Okay, capital gains. Okay, LTCG on sale of residential property and land. Deepika. Yeah. Okay, right. Okay. Yeah, thank you. So capital gain, both land and building. Other sources. This is interesting. Other sources. First, we will examine that he has purchased the house property for 1 lakh to 1 crore 20 lakhs when the stamp value is 1 crore 40 lakhs. Okay, okay. Inadequate consideration. Okay, purchase price is 1 crore 20 lakhs. Okay, purchase price 1 crore 20 lakhs. Stamp value, okay, 1 crore 40 lakhs. Okay, 110% of purchase price. Okay, 110% of purchase price is 1 crore 32 lakhs. Okay, purchase price 1 crore 20 lakhs, stamp value 1 crore 40 lakhs, 110%. Okay, since stamp value exceeds 110% and the inadequate consideration exceeds rupees 50,000. Okay, the whole of inadequate consideration is taxable. So what the assessee did, he had purchased in the 120, you claimed exemption, but when we are reading that line, we are also clear that there was a stamp value given. Whenever you see a purchase in the question paper also, whenever you see a purchase, if they give you the stamp value, somewhere in your mind it should ring they are coming to inadequate consideration as a concept. Okay, because at the time of purchase, what are all the responsibility? One, I have to deduct tax at source if the consideration exceeds, okay, all that thing. But from my income perspective, if I am purchasing and there is a difference between stamp value and purchase price and the stamp value exceeds 110%, 10% here and there acceptable. But if it is exceeding, then inadequate consideration, remember that as a concept. Remember that as a concept. Okay. Right. The sale consideration. The sale consideration of 40 lakhs was distributed to his spouse. Clubbing of income and each of them they are deposited and earned in the interest of 1,80,000. Clubbing provision says asset transferred to spouse. Asset means cash also. Asset transferred to spouse without adequate consideration. The income received is taxable in the hands of transferor. The income received is taxable in the hands of transferor. So, interest of spouse to be clubbed in the hands of assessee, that is Maneksha. Why? Okay, asset transferred to spouse without adequate consideration, income taxable in the hands of transferor. Okay, so in this case, asset is transferred to spouse without adequate consideration. The income of 1,80,000 is taxable in the hands of Maneksha. Whereas asset transferred to major son, no clubbing provision. Okay, no clubbing provision. Asset transferred to married daughter. Okay, no clubbing provision. Okay, asset transferred to married daughter, no clubbing provision. Asset transferred to minor daughter, interest to be clubbed in the hands of either father or mother, whose ever income is higher. Okay, assuming father income is higher, so we are clubbing, and never forget 1,500 rupees, maybe a small quantum, but never forget to give for minor clubbing 1,500 rupees. And interestingly, in optional tax regime, it is not there. Okay, so interest, please be careful about interest in this question, but generally as a concept to understand, any asset transferred to spouse, the income from that without consideration, the income from that transferred asset will be taxable in the hands of transferor. Minor child income will be clubbed in the hands of either. Okay, minor club minor son I did not write it is taxable in the hands of transferor. Minor child income will be clubbed in the hands of either father or mother, whose our income is higher. So these two things will also be taxed. Okay.
Sir, could you repeat that major son and married daughter, sir?
Major son, asset transferred to major son, there is no clubbing provision. Asset transferred to married daughter, there is no clubbing provision. Only spouse, there is a provision. For asset transferred to minor, if asset is transferred to daughter-in-law also, it is clubbed. The income will be clubbed. Asset transferred to spouse, asset transferred to daughter-in-law, asset transferred to any other person, beneficiary being spouse or daughter-in-law. In these three cases, income is clubbed. Major son, major daughter will not be clubbed. Why am I here clubbing minor daughter? Because I never said that as a provision. Minor, the provision is income is taxable in the hand. Income will be clubbed in the hands of either father or mother. Whoever income is higher, before such clubbing, I assumed that person's income is higher. That is the total income also. There are no deduction. So this becomes the total income. Tax also, the question has asked us computation of tax, because gift is a favorite area. Sometimes they will question, that's why inadequate consideration, all these things. Okay, to just be safe on our end, that we understand it, listen to it once somewhere it is told. Okay, LTCG taxable at 20%. LTCG taxable at 20% is 1,41,784. Okay, income taxable at normal rates is okay, right. So you were given is a senior citizen. So this is taxable at 20%. This is taxable minus 10 lakhs into 30% plus 1,12,500. total tax and surcharge at 10%, surcharge at 15%, and HEC at 4%. So, so this is how it works. Okay, right? In the morning, when we did one question, I was telling you senior citizen. Remember, for optional tax regime, senior citizen does not have the 3 lakhs. Only in the normal tax regime, they have 3 lakhs. In optional tax regime, I want to remind you once, in optional tax regime, for senior citizen, it is happening to be 2,50,000 only. And for super senior citizen also 2,50,000 only. There is no additional features on that. There is no additional features on that. Question number 5. Compute the taxation in the following cases. Dinesh has business income 90 lakhs, LTCG after adjustment of 1 lakh 18 lakhs and dividend income 8 lakhs. Okay. Okay. First we'll work for Dinesh. Business income 90 lakhs. Okay, business income 90 lakhs, LTCG taxable under 112A. Okay, taxable under 112A is 18 lakhs and dividend 8 lakhs. Dividend 8 lakhs. Okay, total income. Okay, 1 crore 16 lakhs. Okay, LPCG taxable at 10%. So this is taxable at 10% because they have already adjusted that. Okay, business income and dividend at normal rates. Okay, normal rates, which is nothing but 98 lakhs. This is nothing but 90 plus 8, 98 lakhs. Okay. 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 So okay, that is 180. This is 88 lakhs into 30% plus 112,500. Then the income is exceeding, so 15% is surcharge and HEC at 4%. Okay, HEC and this one. Ramakrishnan has a business income of 2.10 crores, STCG on which STT paid 16 lakhs and dividend 17 lakhs. This is for that computation of surcharge, this question. Okay. business income is 2 crore 10 lakhs. STCG taxable under 111A. STCG taxable under 111A 16 lakhs. Dividend 18 lakhs, 17 lakhs. Okay, okay. So 2 crore 43 lakhs. 2 crores 43 lakhs. Okay, computation of tax. Okay, STCG taxable at 15%. Okay, STCG taxable at 15%. So it will be into 15%. It will be into 15%. Okay, income taxable at normal rates. Income taxable at normal rates. Okay, this plus 17 lakhs. Okay, for that the formula remains this minus 10 lakhs into 30% plus 1,12,500. 66 lakh 22,500. 66 lakhs 22,500. Okay, for 16 lakhs it is at 15%. This okay. So I have the total as okay, total base tax as 68, 62, 500. 68, 62, 500. Okay, and surcharge. Okay, 15% on STCG taxable at okay, so if STCG taxable under 111A. So for this the surcharge is 15%. 15% on dividend income. 15% on sorry, tax on dividend income. How to compute that? How to compute that? Okay. I know my dividend income is 17 lakhs. That is, my total income is 2 crore 27 lakhs, which consists of business income and dividend income, for which the tax is 66 lakh 22,500. What would be the tax for 17 lakhs? On that 15%, repeating 66 lakh 22,500, 2 crore 27 lakhs is 66 lakh 72,500. 17 lakhs is equal to what? Into 17 lakhs divided by 2 crore 27 lakhs. Okay, this if I find out, that becomes tax on dividend income into 15%. Into 15%. Repeating, okay, my total tax is 66 lakh 22,500 for a total income of 2 crore 27 lakh. What is my tax on 17 lakh into 15%? Okay, okay, okay. So on this 15%, balance normal tax into 25%. Balance normal tax into 25%. So this I need to do it here all once. 66, 22, divided by 227 into 17 lakhs. So, okay, balance normal tax. How much is that? 6622,500 minus this much, okay, into 25%. So, this is the total surcharge that I am liable to pay. This is the total surcharge I am liable to pay. And HEC at 4% and HEC at 4%. Okay, okay. Then the third case, okay. Divya has a business income of 4.8 crores, STT of 23 lakhs and 45 lakhs, where the surcharge is going to be 37%. Nothing but there is only one change. Surcharge is going to be 37% for Divya. Business income is okay 4 crore 80 lakhs. STCG is 23 lakhs. This is 45 lakhs. This is 45 lakhs. So here the formula will be for dividend income. The formula will be okay, right? 1 crore 55 lakh 62,500 into 45 lakhs divided by 5 crore 25 lakhs into 15. The formula is this is for this. How much is for this? Okay, on that 15%. On the balance, it will be 37%. It will be 37%. On the balance, it will be 37%. Okay, since dividend income is taxable at 15% surcharge, there is a scope of asking a question on this. There is a scope of asking a question on this. either as an MCQ or as a main part itself showing dividend. So be prepared for that. Okay, it is always the fancy of our examiners. In the case of individuals, somewhere they bring this gift provision into consideration. Question number 6. Explain the taxation of the same in the hands of the recipient, assuming this is the only gift they receive. Okay. Okay, right. Akshaya received from her two friends US dollar equivalent to 21,000 per friend. Okay, right. Akshaya. Okay, total gift received 21,000 into 2, 42,000. Since it is not exceeding rupees 50,000, okay, the whole amount is not taxable. Okay, up to 50,000 you can receive. So this is not exceeding 50,000, not taxable. Okay, Surat Kumar received jewelry worth 2 lakhs from his father-in-law, but the gift was received 1 month before marriage. That is the mistake, because on the date of receiving the gift, the relationship does not exist. Okay, on the date of receiving the gift, he is not the relative. Okay, post marriage father-in-law gift is a relative, not taxable. But here, okay, okay, gift is received from a person who will be would be father-in-law. Okay, on the date of gift, the person is not a relative. That is, the donor is not a relative. Value of gift exceeds rupees 50,000. Jewelry value. Okay. Hence, the entire rupees 2 lakhs is taxable in the hands of the assessee. Okay, the entire 2 lakhs is taxable in the hands of the assessee because he has received the gift without before the relationship subsists. Okay, right?
Sir,
Mayur,
on occasion of marriage means only on the marriage day, sir.
not on the occasion of marriage, can be for the purpose of marriage, but here 1 month before the marriage they will not accept.
So
Okay.
it should be only on that day, sir, generally.
Basically, it should be 1 or 2 days here and there they will accept. That's all, not beyond that. Mayur gifted rupees 60 lakhs to his brother's wife, which he uses for purchase of house property. Simultaneously, on the same day, his brother gifted rupees 55 lakhs to Mayur's son, which is deposited in bank. This is known as cross transfer. In our tax law, this is known as cross transfer. Okay, where two transactions are so interrelated that one leads to the other, then it is known as cross transfer. Okay, X gift to Y's son, Y gift to X's son. Okay, it is known as cross transfer. Income from such transferred asset is taxable only in the hands of transferor. Okay, the income that we receive from the transferred asset is taxable only in the hands of transferor. Whatever income I have received will be taxable only in the hands of transferor. Okay, okay, friends, okay, where the quantum are different, the cross transferred amount in the given case 55 lakhs. ஏன்னா ஒருத்தர் வந்து 60 lakhs, another is 55. So 55 the cross transferred amount. 5 lakh you cannot call it as cross transferred amount. In the given case, rupees 55 lakhs will only be considered. That is, income on rupees 55 lakhs will be clubbed. That not that 5 lakhs, 55 lakhs will be clubbed. Where two transactions are interrelated, that one leads to the other, it is known as cross transfer. Income is taxable in the hands of transferor. A company purchased the shares of unlisted company. Okay. Purchase of shares of unlisted company. Normally, people think that gift provisions are not applicable for company. No, it is not so. It is also applicable in this case. Okay, the consideration paid should be at fair market value. Okay, FMV be arrived at on prescribed method. Okay, either discounted cash flow method or net asset method. Either one of the method will be followed. FMV should be arrived at prescribed method, where consideration paid is less than FMV, then the difference is taxable in the hands of the company as income, where the consideration paid is less than the fair market value, whatever is the difference. So gift provisions in the case of purchase of shares of unlisted company will be applicable even for a company, not only for an individual. Priyanka received a car worth rupees 11 lakhs as gift. Please understand, car is not a specified movable asset. Car is not a specified, sorry, once more, I missed something. Company issuing shares at a premium. Okay, question number, okay. Issue of shares at a premium. இதுக்கு வந்து the concept is known as disproportionate premium. Sir, again for closely held company, your company's net worth, okay, or your company's fair market value based upon discounted cash flow method or other method comes to 40 rupees. 10 rupees face value, 30 rupees premium, 40. But you are issuing the shares at 100 rupees. When the net worth of the company or on the prescribed method comes to only 40 rupees, but you issued the shares at 100 rupees, that additional 60 rupees, that is 30 rupees premium becomes 90 rupees premium. Disproportionate premium is taxable as income in the hands of the company. Many startups are like were doing like that, where shares are issued at a premium, okay, by a closely held company. Such share value is higher than the fair market value of shares, then the difference between issue price and FMV is known as, okay, is known as, okay, disproportionate premium. Disproportionate premium. This is taxable in the hands of the issuing company. Disproportionate premium is taxable in the hands of the issuing company. Disproportionate premium is taxable in the hands of the issuing company.
Sir, that sir, that Mayur question, that 60 lakh is not at all taxable, sir.
Yes, sir. Income on that 60 lakhs is taxable, not 60 lakhs. Sir.
Oh, only this 55 will be taxable.
Income on 55 lakhs, sir.
Like depositing in bank and getting interest like that.
That interest, sir. That interest will be clubbed in the hands of the transferor. Only the income. The
Oh,
gift
okay.
is between relatives, no problem. The gift is between relatives. So for the recipient, it is anyhow not taxable. But the income on the gifted amount will be taxable in the hands of the transferor.
Both the 60 lakh and 55 lakh.
For the income of 55 lakhs, because cross transferred amount is only 55 lakhs, not 60 lakhs. Cross both of them together. Okay, the transaction value which matches is only 55 lakhs. The other 5 lakhs income will not be clubbed, sir.
All right, sir.
Okay, next. Okay, Priyanka received car as gift. Okay, see, with regard to movable property, okay, movable property includes jewel, chairs, work of art, architecture, painting, okay, bullion, okay, okay. Vehicles are not included, hence gift of car is not taxable in the hands of the receiver. Then, so even if you receive vehicle as gift, it is not taxable because it is not a specified asset. It is not a specified asset. If in the previous case, Priyanka has received it from your employer, will your answer change? Yes. Okay. Priyanka, if she is an employee, Priyanka, if she is an employee, taxable, okay, as a perquisite in salary. Okay, it is not coming under IFOS section 56 provision. It is coming under section 17 itself. It is not coming under section 56 provision. It is coming under 17 itself. So it is taxable as perquisite of salaries. Okay, right. Rohit. Uh, Rohit gave cash gift of 1 lakh to the HUF in which he is a member. Not taxable, my dear friends. Rohit. uh, Member to HUF. A member is considered as a relative of HUF. Any gift from a relative is not taxable under IFOS. Any gift from a relative is not taxable under IFOS. So it is not taxable. Partial partition of HUF and allotting to its members. Partial partition. Okay, distribution of assets to members on partial or complete partition of HUF is not regarded as transfer. Hence, capital gain does not arise for HUF. Gift provisions are not applicable for members. Okay, so if there is a partial or complete partition, okay, liquidation not taxable for the company, partition not taxable for the HUF, okay, on a dissolution of a firm, we saw that it is taxable. Distribution of assets to member to partners taxable. So partial or complete partition and distribution of assets to members not taxable. Treatment of enhanced compensation and its interest. Enhanced compensation and interest. Okay, where court increases the compensation, it is taxable in the year in which it is received. Okay, legal expenses will be allowed as deduction. Legal expenses will be allowed as deduction. No other deduction you can claim. Only legal expenses will be allowed as deduction. No other deduction you can claim. Only legal expenses will be allowed as deduction. Okay, right? Are you clear? Okay, where court increases the compensation, okay, it is taxable in the year in which it is received. Legal expenses will be allowed as deduction. Where there is a delay in payment of compensation, then interest becomes payable. Okay, interest becomes payable. The provision says interest is taxable only in the year of receipt. Okay, interest is taxable only in the year of receipt. 50% of such interest is allowed as expense deduction. Okay, a flat 50% is allowed as deduction. Somewhere store it in your mind. Okay, okay, I don't see a question, but generally, so okay, these are all the enhanced compensation treatment. You will not, you would have already claimed the cost of acquisition when the original compensation is received. So now you cannot claim. That's why for additional compensation, we would have returned cost of acquisition as 0 because original compensation liye nama claim பண்ணிட்டோம். So whatever you receive is your income in the year of a receipt. Legal expenses claim. If there is interest only in the year of receipt, 50% you can claim. Question number 7. Analyze
Sir,
the
interest,
following.
any specified percentage, sir? 6%, something like that.
Edura Raja?
In this interest on enhanced compensation act, la percentage கொடுத்திருக்கா sir?
Income Tax Act la illa. It is not under Income Tax Act. அது government land acquisition act அந்த மாதிரி இதுல தான் பார்க்கணும். Income Tax Act la why to worry about percentage. Question number 7. Analyze the following.
Hello, sir.
Sorry.
Sir, original long term capital loss இருந்தாலும் enhance
set off பண்ணிக்கலாம். எடுத்து long term capital gain ஓட set off பண்ணிக்கலாம்.
This compensation treatment will remain the same.
The compensation is for the original asset. If the original asset is a long term capital asset, compensation is also a long term capital gain. Question number 7. Question number 7. A lottery dealer winning lottery, will it be treated as business income? No. Okay. If you remember, refer Manju and Co. Okay. Lottery dealer winning. Okay. Winnings will be taxable under IFOS and not as business income. Okay, only the commission the lottery dealer gets will be coming under the benefit of business income. Winnings is always winning even if it is by a lottery dealer. Can a deduction fail to be claimed in the initial years be later claimed? Okay. Section 80 இது assessee, if you, for example, you will be getting for 5 years, the deduction. First 2 years I failed to claim. For first 2 years I failed to claim. Probably my auditor did not tell me, so I did not claim. Now in the 3rd year I can understand that I am eligible for 80IAC. Now can I claim? Assessing officer said, first, since you have foregone, it is permanently foregone. No, you can start claiming from the later years also. Okay, you can start claiming from the later year also. Citation vandhathu. Praveen Soni. Yeah. Praveen Soni. Okay. This is the case law. Praveen Soni held by the High Court that the provision has nowhere stated that assessee, if he fails to claim in a year, the same will not be allowed for any year. Hence, AO cannot deny. Okay. Praveen Soni. Okay. Assessee can claim the deduction in the later years, even if it is not claimed in the initial years. But the overall period of 10 years is sealed. You cannot do anything about it. Okay, right.
Sir, English, we also mention about assessment, sir. Like if he speak for assessment, then he can claim அப்படின்னா
கிளைம் பண்ணலாம்ன்றது அந்த இடத்துல இது இல்ல நார்மலா ரிட்டர்ன்ல தான் யூ கேன் ரிட்டர்ன் டைம் வுட் ஹவ் லாப்ஸ்ட் அது வந்து ஆப்ஷனல் தான் டிபெண்ட்ஸ் ஆன் கேஸ் டு கேஸ் பேசிஸ் நாட் அ பிளாங்கெட் பர்மிஷன் கிவன் இன் law.
No, sir. If he's taking for assessment, like 143(3) assessment edutha, at that time, if he knows that he has not yet claimed, can he claim it at that point of time?
No, you cannot. அதான் சொல்றேன். You cannot claim. Any claim can be only by a return. The time limit for filing the return is over.
Okay.
Can the benefit of self-occupation be claimed by HUF? Yes. A firm or company cannot say that they are self-occupying a house. HUF is like a legal, okay, is like a human being only, so they can claim the benefit. Okay, I think Bojan Wala தான் கேஸ்ன்னு நினைக்கிறேன். சொல்லு. என்ன சொல்லு? Normal. Hari Prasad both, okay, and the benefit of self-occupation held by the High Court. HUF is not a fictional entity like firm, a company or company which cannot reside. HUF consists of members who are individuals who need to reside, so the benefit can be claimed. Okay, benefit of self-occupation can be claimed by HUF also. Okay. Can 54F be denied as construction is not completed within 3 years? Sambandham Udayakumar. Okay. Okay. Intention is investment. If intention is proved, then time delay can be condoned. Okay. So it is possible, it's not necessary, it should be construction, should be within 3 years. Right. Praveen Kumar gives you the following particulars. Compute the taxable income and tax due thereon. Basic salary, DA, various other allowances, 75,000. Bonus, medical perquisite provided as reimbursement of medical expenses. Educational expenses of his son met by the company. Okay. 1400cc car provided by the company. Okay. Praveen exercised the option of taking up 300 shares allotted by the company on 11th June by paying 360 per share, wherein the fair market value was 750. However, on the date of allotment, the fair market value was 900. Interest income from various deposits, 75,000. Dividend income, 76,000. Ground rent from vacant land, 12,000. Praveen takes a loan for his education and during the year he repaid 48,000. The interest is 50%. Praveen purchased the first new property of 40 lakhs by taking a loan at 10%. He has paid interest of 270 on that loan and still payable for, so total interest amount is 3 lakh 10,000. 270 paid and 40,000. Okay. Praveen also purchased the electric vehicle fully by taking a loan for 20 lakhs on 1st October. Interest is 11% and the repayment starts only from April 21. Okay, right? Nothing but okay. Salary income is there. Okay, IFOS income is there. This is 80E. This is 80EEA. Stamp value not to exceed 45 lakhs. This should be the first house of the assessee and it should be self-occupied. This is 80EEB. Okay, right? But in that 80EA, we also understand that the assessee has a house property, self-occupied house property. Let's quickly complete this. Question number 8. Computation of total income, salary. Okay, basic plus allowances. Okay, they themselves has given it as 75,000 per month. 75,000 into 12. Okay, bonus 1,20,000. Bonus 1,20,000. Medical perquisite. Okay, if you remember that you will get 15,000 for this, that is gone. Okay, 26,000 fully taxable. Okay, educational perquisite. It's not an allowance, it's a perquisite. Okay, Delhi public school. Okay, என்ன சொல்றேன்னா exemption is rupees 12,000 per month. Where it exceeds 12,000, it's wholly taxable. Okay, it's not 12,000 varaikku exempt. 12,000 lena, it's not that like gift. It becomes wholly taxable. It becomes wholly taxable. In this case, it has exceeded 12,000. Sorry, 18,000. Okay, so it is wholly taxable. It is wholly taxable. Then, okay, this is not a 80 IAC company. So it is going to be taxable in the year of exercising the option. Okay, PV of ESOP, not a 80 IAC company. So let us tax it. Okay. Okay. FMV on the date of exercising the option. We should not look at on the date of allotment. FMV on the date of exercising the option 750 per share. 750 per share. Okay, right? Issue price 360. Okay, so PV of per share, perquisite value per share is 750 minus 360, okay, 390. The number of shares he was allotted is 300. So perquisite value 1,17,000. Okay, even if it is ESOP of 80 IAC, I will include it here later when I am after computing the tax. In the 1,17,000 I will defer it. Otherwise, it will be included in the income only. Okay, so are we through with salaries? Yes, we are through with salaries. Oh, there is a car, sorry. Okay, 1,400 cc car provider. Okay, always they need not say that it is always partly official, partly personal. PV of car, this morning I told you 1,800 into 12. 1600 cc க்கு மேல இருந்தா it is 2400. 1800 into 12. Okay, gross salary, standard deduction. Okay, taxable salary is 12 lakh to minus 50,000. Taxable salary 11 lakh 52,600. Taxable salary 11 lakh 52,600. House property, it is self-occupied. You have purchased it newly this year and it is self-occupied. Okay, remember in the optional tax regime I cannot claim this 50,000 and this house property interest also I cannot claim. Okay, right? NAV nil. Okay, interest on borrowed capital, though it is 3,10,000, it is both paid or payable but restricted to 2 lakhs. Can I set off the house property loss against salary income? Yes, you can set off. Okay. Third, other sources. Okay. Other sources consist of interest 75,000. Dividend 76,000 dividend. Remember, rent of vacant land is coming under IFOS. Only rent of house property will come under house property chapter. Ground rent means rent of vacant land. Ground rent of vacant land. That will come here only. It is coming to 12,000 per month. So 12,000 into 12, 1,44,000. Okay, இதுக்கு மேல எல்லாமே deductions. So gross total income. Deduction under chapter 6A. Deduction under chapter 6A. ATE, educational loan. Only the interest portion will be allowed. 48,000 into 50%. Everything should be from a recognized financial institution. All the three. So we assume it is from a recognized financial institution. 48,000 into 50%. ATEEA, interest on house property. Okay, additional interest. Okay, all conditions fulfilled. Okay, all conditions fulfilled. Okay, what are all the conditions? Value of property should not exceed, stamp value should not exceed 45 lakh. It should be from a recognized financial institution. It should be the first house and it should be self-occupied. All fulfilled. Interest exceeding rupees 2 lakhs, because up to 2 lakhs you have already claimed. 1,10,000. Maximum is 1,50,000. Whichever is less, so you can claim 1,10,000. Okay, 80 EEB. Okay, purchase of electric vehicle. Purchase of electric vehicle. 80 EEB, purchase of electric vehicle. 20 lakhs, interest is 11 lakh per 11%. Okay, interest payable will also always qualify. Actual interest, okay, 20 lakhs into 11% into 6 by 12. Okay, repeating, 20 lakhs into 11% into 6 by 12. Okay, maximum Okay, 1,50,000. So here also 1,10,000. The total deduction you can claim under chapter 6A, none of this you can claim. None of this you can claim if you are following optional tax regime. Total income, there are no special rates. I'm not wasting our time in working out taxes. So there are no special rates. Now taxes are really in your fingertips. Let's leave it there. Okay. So the question is, these are some new sections introduced a couple of years back. This has an extension of 1 year. So that's why the question is, and also to generally tell you, okay, be careful on some aspects of salary. Salary I'm recollecting from various arenas. Okay. So not in one question, in various questions, so that you have some idea. Question number 9. What donation can be made by an individual? What cautions need to be adhered to get maximum benefit? Question number 9. Okay. Donation to approved institutions for availing 80G. Okay, for availing 80G, Prime Minister, National Relief Fund, Care Fund, etc. Caution, what is the caution I have to take? Okay, donation in cash should not exceed rupees 10,000. In the section matra, it is 10,000. Okay, donation in cash should not exceed 10,000. Okay, donation to scientific research / rural development. Okay, 80 GGA. Okay, 100% allowed. Okay, and caution. No, sorry. Donation should not exceed 2,000. Sorry. In the section 10,000 in sorry, in the section 10,000 in that is also changed. Caution. Okay, donation in cash, this is an amendment, not to exceed rupees 2,000. Rupees 2,000. Donation in cash not to exceed 2,000. Okay, donation to recognized political party. Donation to a recognized political party, 80 GGC. Individuals na 80 GGC, 100% allowed. Same caution. Okay, same caution. Okay, never allow the donation in cash in excess of 2,000. So it is the same caution which you have to take. These are all the donation based deduction an individual can avail. Question number 10. What are all the special benefits available to a senior citizen? Question number 10. Okay, benefits of senior citizen. Okay, normal slab. Okay, basic exemption limit 3 lakhs. Okay, for super senior citizen 5 lakhs, that is more than 85 lakhs. Okay, however, okay, BL will be 2,50,000 if senior citizen opts for optional tax regime. Okay, remember that. Okay, this is one benefit. Normal will be 3 lakhs. If I look at if I go on to look into chapter wise, okay, salaries, there is nothing. Residential status, salaries, house property, PGBP, okay, capital gains, IFOS, nowhere I am getting any benefit. But in deduction, I have some things. Section 80D, okay, medical insurance, okay, will be if the insured person is a senior citizen, 50,000. If the insured person is a senior citizen, I will get 50,000. Then 80 DDB, That is specified disease treatment expense. Okay, if the ailing person is a senior citizen, I get up to 1,25,000. If the ailing person is a senior citizen, sorry, I get up to 1 lakh 80 DD down 1,25,000. Okay, that is for in the treatment. Okay, I will get up to 1 lakh 40,000 for others, 1 lakh. Okay, then comes my 80 TTB. Okay, interest, both the savings and FD. Okay, here I am getting 50,000 as a benefit. Here I am getting 50,000 as a benefit. You need not pay any advance tax if a senior citizen does not have business income. If does not have business income. Okay, 194A TDS rate, TDS threshold, okay, is 50,000. TDS threshold is 50,000. If you are a senior citizen, these are all the various benefits the law provides you. Slab rate, but not for optional tax regime, 80D, 80 DDB, 80 TTB, advance tax not applicable, and 194A. Question number 11. What are all the special benefits available for royalty? Question number 11. Section 115 BBF. Section 115 BBF. This is first section which gives us royalty. Okay. Royalty income if the patent is developed in India and registered under the Indian law is taxable at 10%. Royalty income, if the patent is developed in India and registered under the Indian patent law, then the tax limit, the tax rate is 10%. No expenses to be claimed. You cannot claim any expenses. Okay, 115 JB not applicable. You know that we are excluding that. Okay, developed na enna. Okay, at least 75% of the expenditure should be incurred in India. That's what is known as developed in India. So section 115 BBF gives you a benefit. Suppose I don't want to avail section 115 BBF, then comes section 80 RRB. 80 RRB, okay, royalty income from patents. Okay, deduction is actual royalty or rupees 3 lakhs, whichever is less. Actual royalty or rupees 3 lakhs, whichever is less, which is another aspect of royalty spoken law. Section 194J, okay, royalty falls under professional service, okay, rate of TDS 10%, threshold 30,000. However, for films, it is 2% from financial year 2021. If it is for exhibition, purchase, etc. of film, okay, right? It is only 2% that the whole royalty is going to be. Then section 115A is a non-residents, okay, for non-residents, okay, royalty is taxable at 10%. Though we will see it tomorrow, okay, I am again telling you royalty is taxable at 10%. These are all the places under income tax law where royalty is being discussed, okay, about, and that rate of taxes or the special provisions available for royalty. Question number 12. From a shareholder's perspective, how will buyback of shares and surrender of shares and liquidation becomes taxable? Okay. Question number 12. Buyback of shares. Okay, not taxable in the hands of shareholders. Okay, company pays additional income tax. So for share members, it's exempt under 1034. For a member, this is exempt under 1034. Buyback of shares is exempt for a member under 1034. Whereas, okay, surrender of shares on liquidation, surrender of shares on liquidation, surrender of shares on liquidation. Please understand, if it is liquidation, the provisions are slightly different. Okay, okay, right? Taxable only for member, not company. For a company, it is exempt, taxable for member. Full value of consideration will be, okay, FMV of asset plus monetary consideration minus deemed dividend, that is share of reserves, share of reserves. But ஒரே ஒரு point extra add பண்றேன், such deemed dividend is taxable under IFOS. Okay, so even though you reduce it from capital gain computation, now the company is not going to pay dividend distribution tax for that. So such deemed dividend will be taxable in the hands of the shareholder under IFOS. So buyback of shares, company pays, shareholder is exempt. Liquidation, company is exempt, shareholder becomes taxable. Okay, I believe that apart from this, they will not question you anything on assessment of individual. இதுவே ரொம்ப rare அங்கங்க, okay, they might pull it out or some adjustments etc. Apart from this, the rarest case will be testing of assessment of individuals. Okay, now on a general scale, I want to tell you some things. As far as assessment is concerned, the question is completely going to be from faceless assessment or faceless appeals. Now they cannot question you on notice because everything is faceless. They cannot question you on valuation because you have a valuation unit that is going to do. Verification unit is going to do some aspects. Review unit is going to do some review aspects. So questioning on assessment is going to be out of the purview. Out of the purview. I mean it. 140 லேந்து ஆரம்பிச்சு 160 வரைக்கும் they cannot know, and also the first level appeal. Okay, the second level appeal, okay, but the first level appeal also they will not. So majority of the assessment things you are going to have only are sure our question. Assessment focus is going to be on 10 or maximum 15 marks. Okay, if at all they are going to ask you from the existing, they might ask you some case law. Please go through the case law alone once, that is more than sufficient. But listen to faceless assessment, faceless appeals twice, thrice. What is review unit? What is the work of review unit? How the assessment process happens? Because these will be the questions with regard to assessment. That is what is my sincere feeling. Don't waste time on assessments and other things. Okay, right? With this, I go into some of the aspects where a small fineness of touch is essential, both from our what I would call it as a MCQ level and also in our general level. Okay, right? So I am going to take you through to some of the provisions in a very short manner, okay, and so that you are very clear. Okay, section 269 SS, section 269 SS accepting of loans, deposits, okay, and any and similar sum. Okay, accepting of loans, deposit, and similar. Okay, so this provision is for not for the lender. It is not for the lender. It is for the acceptor. It is for the acceptor. No person shall take or accept. Okay, please understand, it is not a lender based provision. The sword hangs over the head of the recipient and not the payer. Okay, no person, okay, shall take or accept any loan or deposit or any other sum that is which partakes the character of loan or okay, except by account payee, except by approved modes, except by approved modes. However, loans or deposit up to rupees 20,000 can be in other modes. Now I am going to make you understand what is this up to rupees 20,000. Okay, up to rupees 20,000 it can be in other modes. What is up to rupees 20,000? Up to rupees 20,000 means not only the received amount, plus the already outstanding amount along with interest should not exceed rupees 20,000. Okay, the most important point is, my dear friends, I already have 15,000 in my books as loan from, okay, let me tell you, okay, I already have in my books loan received from Abhiprita 15,000. I already have in my books. Now, how much can I again get 15,000 for as cash from Abhiprita? The answer is no. The answer is no, because together the quantum exceeds 20,000. Another 5,000 only maximum I can get it. Another 5,000 only maximum I can get it. Any amount more than that, I should receive it only by the approved modes. We know debit card, credit card, NEFT, Beam, Rupee, okay, whatever may be the banking channels that are there, okay. Where there is a violation, section 271D penalty applies. Where there is a violation, I received, okay, 271 the penalty applied. 100% of the amount received by unapproved modes. Okay, 100% of the amount received by unapproved modes. 100% of the amount will be the penalty. So I am not supposed to receive. If I receive, then it is a violation. Next comes section 269 ST. Okay, section 269 ST. Okay, mode of undertaking a transaction. Mode of undertaking a transaction. That is every transaction which is not covered under 269 SS on the loan transaction. Michapadi sale of goods, everything is covered here. Okay, everything is covered here. Okay, no person, okay, can receive any amount in excess of rupees 2 lakhs, okay, in excess of 2 lakhs, except by approved modes for any transaction, no person can receive any amount in excess of 2 lakhs otherwise than by approved modes. Okay, otherwise than by approved modes. Okay, right? So the term transaction means aggregate of all payment on the same date. That is also a transaction. Aggregate of all payments on different dates for the same purchase. Today I purchased for 3 lakhs. Today I pay 150, tomorrow I pay 150. That is also a transaction. Or today I made 3 purchases, 1 lakh, 1 lakh, 1 lakh, and today I paid 3 lakhs. Aggregate of all payments on the same day, aggregate of all payments on different dates, but for the same transaction. Okay, for the same event or same transaction. This is not only for business, especially in the wedding, the caterers, all these people will be under problem because of this. Okay, yeah, all these people will be under problem because of this, or in respect of a single transaction. Okay, in all these cases, this provision applies. This provision applies. They gave only one relief for NBFCs. Okay, on banks. Okay, for NBFCs, all provisions are not applicable for banks, including cooperative banks, government, and post office. Avangalam they can receive. Banks, government, and post office, these provisions will not apply. For NBFCs, okay, CBDT notification gave relief for NBFC. The limit will be per installment and not total quantum. Okay, if somebody pays 30,000 per installment, he has not paid 10 installment. Now NBFC collects from him 3 lakhs. Are we violating? No. NBFC alone, if it is per installment, if it exceeds 2 lakhs, approved mode. Otherwise, they can take it by cash mode also. Okay, otherwise they can take it by cash mode also. Okay. Penalty is under 271DA. Penalty is under 271DA. Quantum of transaction will be 100% of the quantum of transaction will be the penalty. 100% of the quantum of transaction will be the penalty. Okay, since the assessment areas are reducing, probably they are going to question for the next 2-3 attempts in these arenas. So I want to make you understand these things. Okay, right? Because assessment, it's a new thing. So on the simple questions, if they want to ask another question, they might ask from these things, or it can also be in your MCQ. Section 269, okay, SU, okay, acceptance, ellame receiver based, acceptance of payment through prescribed modes. As acceptance of payment through prescribed modes, section 269 SU, accepting a payment through prescribed modes, applicable for assessees whose turnover during the immediately preceding year exceeds rupees 50 crores. Okay, they have to, apart from their payment gateway, they have to have one more thing. Okay, apart from the payment gateway, Razorpay or CCS Avenue, apart from these things, they should have one more. Okay, applicable for assessees whose turnover during the immediately preceding year exceeds 50 crores. Exceeds 50 crores. Okay, these entities should give the any one of the following payment options apart from their payment gateway. They might have their own payment gateway. Apart from this, they should give, okay, debit card powered by Rupee. Okay, these are more of government. Okay, UPI Beam. It's actually Beam UPI. Okay, Beam UPI. That is unified payment interface. Okay, or UPI QR code. Okay, apart from that, they might have their own Razorpay or any other payment. They should have, if their turnover exceeds 50 crores, they are supposed to have this. Okay, okay, where there is a violation, 271 DB penalty, rupees 5,000 per day of violation. It's a continuous offense. Till you rectify, it is 5,000 per day. However, in this case, if genuine reasons are shown, they are saying, okay, not in 269 SS, not in 269 ST, but here, if you show genuine reasons, they will waive this penalty, but you are supposed to maintain this. Okay, right? Section 269P. Okay, repayment of loan or deposit. This is the most important. 269 SS acceptor based. 269T. Okay, repayer, that is the person paying should be ensuring that he is paid. Okay, where the outstanding liability due to loan or deposit exceeds rupees 20,000, where the outstanding liability, which includes interest also, where the outstanding liability due to liability due to loan or deposit exceeds 20,000, repayment shall be only by approved modes. Remember, repay. Sir, repay பண்றது 10,000 தான். அது இல்ல. You might even repay 10,000, but what is outstanding? Outstanding is 50,000. Outstanding is 50,000. Then you have to pay only by approved modes. You have to pay only by approved modes. Okay, where there is a default. Okay, 271E. 271E penalty, 100% of amount paid by unapproved modes. Okay, okay, 100%. Lender 269T, recipient 269S. Okay, these are SS. These are important to understand. Okay, these are important to understand, right? I'll complete this and come to penalties. Okay, in the following questions, specify if there is a violation. If so, what is the violation and what is the penalty for that violation? Sanjana is accepting a loan of 5 lakhs in cash from Anjana. Okay, right? Question number 1. Okay, violation of 269 SS. Violation of 269 SS, 100% of the amount will be the penalty. 271D, 100% of the amount will be the penalty. Okay, right? Next, Sanjana proposes to sell a property to Anjana and 1 lakh and received 1 lakh in crossed check. Received 1 lakh in crossed check as advance. Received 1 lakh in cross check, not an approved mode. Not an approved mode. Okay, sir, is it partaking the character of loan or deposit? It is not only loan or deposit, loan, deposit, or any other sum of that nature. So, advance is like a loan only. Advance, if the transaction does not go through, they have to repay. So, it is a violation. Okay, violation of 269 SS, 100% penalty. Okay, violation of even advance and any other sum. Okay, and any other sum has a meaning always. Adjusting generis. Sanjana already owes to Anjana 15,000. Okay, there is already, I have received a loan of 15,000, which she received a year back through electronic boards. I am not bothered. Now she is borrowing rupees 10,000 by cash, gone. Okay, violation of 269 SS, penalty 10,000, not the entire 25,000. Okay, it is the whatever is there now the penalty amount, transaction value, because when already 15,000 is due, maximum you can get is only 5,000. If you are getting another 10,000, there is a penalty. So, okay, Sanjana already owes, not owns, sorry, owes Anjana 10,000, which she received a year back in cash. Now she is borrowing 15,000 by account pay check. No problem. No problem. Okay. No violation of 269 SS. So no penalty. Now when you are getting it by approved modes. Not a problem. Not a problem. Provision of 269 SS is applicable only for business associate. Apadiya, illiya, any person. Okay. Okay. Provision is applicable for all associates, not just business associates. For all associates, it is applicable. Okay, so it is nowhere said. Provision of 269 SS is not applicable for associate getting agricultural loan. Apadiya, illiye? Okay, never we said so. Okay, no provision is applicable even for agricultural loans. Even for agricultural loans. Okay, right? Are there any exception to 269 SS? Yes, exception are banking companies, cooperative banks, post office, and government. Okay, they can accept in cash. Okay, accepted. Okay, Sanjana is accepting a loan of rupees 5 lakhs from Anjana and refunds the same in cash in a month's time. Refunds the same in cash in a month's time. Okay, okay. Violation of 269T. Violation of 269T, 271E penalty is applicable. Okay, repayment of loan. The balance outstanding is more than 20,000. So you are supposed to repay through approved modes. Where you have repaid by other modes, you are liable. Sanjana got a loan from Anjana for 18,000. The interest accrued on that loan is 5,000. So, இப்போ எவ்வளவு வந்திருக்கு 23,000. Sanjana pays 11,000 in September and balance 12,000 in October. I did not write in cash. Okay. Sanjana pays, I want you to understand, this is an interesting thing. Sanjana pays, okay, 11,000 in September and balance 12,000. Okay, right? 2, 3, 4th question, 5th question, 6th question, 7th question, 8th question. Now I am coming to 9th question. Balance outstanding on September. Balance outstanding on September. When she pays in September 2020, the balance outstanding is 23,000. Okay. Whatever paid in September by unapproved mode will attract 271E. Whatever paid in September, because the balance outstanding is more than 20,000, including interest, so it is more than 20,000. Balance outstanding in October. Okay, because Sanjana paid 11,000. Now the balance outstanding is only 12,000. Okay, there is no violation even if it is paid in unapproved mode. Okay, the balance outstanding, if it is more than 20,000 only, or the provision is applicable, where in this case 23,000. So inga 11,000 penalty kandipa varum. Inga 11,000 penalty. Ana inga that 12,000 penalty will not come because the balance outstanding is not exceeding 20,000. It's not exceeding 20,000. What are all the unique features of repayment of loan? I have written the theory. Just take that, the balance outstanding and other things. That is what you have to see. Hans is a partnership firm. Two partners introduced 5 lakhs, but for which they were unable to explain the source of receipt. We have already seen M. Venkateshwara Rao one case where only the firm can be proceeded against, not the partner. Unexplained cash credit like varadhu. Other two partners provided 2 lakhs in cash to the firm. Firm has violated. Okay. 10th question, 10th question, okay, we have already answered. 11th question, other partners, okay, what, okay, the firm by receiving cash loan from partners has violated 269 SS. The firm by receiving cash loan from partners has violated 269 SS. There is one case law called Muthoot Financiers. There is one case law called Muthoot Financiers where they have said firm and the partners are the same, so loan can be received by partner. கொஞ்சம் கான்ட்ராடிக்டரியா இருக்கு. ஏன்னா இப்பதான் நம்ம வந்து no firm cannot receive னு சொல்றோம். But Muthoot Financiers, can loan or deposit received from partners is penalty leviable? Okay. It was held that partnership firm is not being a juristic person. The interstate transaction between firm and person are not covered under section 269 SS and T. Okay, so there is an exception to this. However, நிக்குமான்னு தெரியல. ஏன்னா இப்பதான் we saw unexplained sources is not applicable. அது ஒரு கேஸ்ல இது. Okay, exception in Muthoot Financiers. Okay, please write the exception also. Please write the exception also. Okay, in the examination. Okay. 12. KSR Jewellers receives the following: 1,50,000 and 1 lakh by 2 bearer checks for sale made to Chandan. Okay. 12. Okay. Okay. Case A, violation of 269 ST. Violation of 269 ST, 100% penalty. Okay, entire 2,50,000 penalty, 271 DA is the penalty section. Okay. Chandan had purchased for 2,50,000. Gave 5 checks on 5 different dates, penalty. Okay. Case B, for a single transaction, which exceeds rupees 2 lakhs if the aggregate payment through unapproved modes, okay, if the aggregate payment for a single transaction, okay, if the aggregate payment through exceeds 2 lakhs, okay, 271 DA penalty will be leviable. Okay, there is no doubt leviable. Okay, penalty will be leviable in this case also. Okay, staggered payments will also be covered. Chandan had purchased 5 different dates, 50,000 each, and paid on a single day violation. Okay, case C. If a single transaction here is payment exceeds rupees 2 lakhs, that recipient க்கு தான் எல்லாமே, okay, recipient க்கு தான், okay, receiver based தான் provision, okay, 271 DA is applicable, okay, receiver based தான், he will pay only 100%. What are all the exemptions of 269 ST? Name தான் NBFC, okay, NBFCs they can, okay. 14th question. Saravana Stores has made a turnover of 100 crores in 1819. You are the auditor of the company. What is the key advice? They have to, last year question, 1920, they have to go with any of the three things. Debit card of Rupee or UPI Beam or UPI QR code. Anything. Otherwise, 5,000 per day is going to be the penalty. Otherwise, 5,000 per day is going to be the penalty. Okay, friends? Okay, we take a small break. Okay, time in my watch is 19:52. Okay, or 7:52. I'm back by 8:10. Yeah, friends. Okay, in the penalties perspective, apart from the recent addition of penalty, that is where there is a false or omission in the entry, 100% of with the intention of avoiding tax, 100% of the amount will be levied as penalty, both on the assessee as well as the person instigating the assessee. It can be another supplier who gave a false invoice or any person, okay. Apart from that, which can be an amendment related question, the other question can only be in 270A, underreporting or misreporting of income. The other question can only be in 270A, that is underreporting or misreporting of income. That is what I personally feel, that it will not be away from that. So a quick understanding of this penalties. Okay, question number 1. Pramod, a resident individual of age of 52 years, has not furnished his return of income for assessment year. Sorry, I should have changed it. It is 21-22. Assessment year 21-22. However, his total income assessed under 143.3 is 14 lakhs. Okay, let it be even 18-19, not a problem. Whether penalty of 270A is attracted, if yes, what will be the quantum of penalty? Assume that it is not a case of misreporting. Okay. Okay. So question number 1. Okay, where return is not filed, so 143.1 would not have taken place. Okay, the income determined under assessment, determined in assessment, whatever may be the assessment, will be considered as underreported. In this case, it is underreported or misreported. Okay, in this case, underreported. Okay, the whole tax will qualify. Okay, that is basic exemption limit ku mela irukra ellame. So what is the total income determined in assessment? What the total income determined in assessment is, okay, 14 lakhs. 14 lakhs. Okay, tax on total income We all know the formula. It's an individual. 14 lakhs minus 10 lakhs into 30% plus 1,12,500 and H, okay, and HEC at 4%. Okay, total tax payable. Okay, so this will be qualifying for, okay, penalty under 270A will be 50% of tax payable. 50% of tax payable. Since it is under reporting, it is 50% of tax payable into 50% into 50%. So you will compute the tax in a assessment has taken place under 144 best judgment assessment. When return is not filed, best judgment assessment can only take place. So assessment has taken place under best judgment. So 50% of tax paid. Okay. Okay. Now LLP. Messrs. Pluto LLP filed its return for income declaring a total income of 25 lakhs on 2nd October 21. On processing of return, the total income determined under section 143(1) is 30 lakhs. Okay, after disallowing claim for deduction under section 10AA on account of late furnishing of return. Thereafter, on scrutiny, assessing officer made an addition under 40A and TDS and statutory and passed an assessment order under 143(3) for 40 lakhs. Later on, the assessing officers noticed that certain income has escaped assessment and issued notice under 148. The total income reassessed is 45 lakhs. Considering that none of the addition or disallowance made in the assessment or reassessment qualifies as misreporting, compute the amount of penalty under 270A at the time of assessment, at the time of reassessment. So, one of the key features is what is the undisclosed or what is the differential amount, the difference between income assessed and income determined under 143(1). The difference between income assessed and income determined under 143(1). So, in the declaring a total income, filing of returns is not at all counted. Whatever is said in 143(1)A, okay, over and above that only will be coming under penalty regime. Okay, question number 2, particulars. Tax on 143(1). Okay, tax on 143(3) and tax on 148. எப்பயுமே two taxes போட்டு அதோட difference. Sir, can I find out the difference tax? The law does not permit. So, okay, income determined. In 143(1), they determine an income of, okay, 30 lakhs. In 143(3), they determine an income of 40 lakhs. In 148, they determine an income of 45 lakhs. Tax on such income. Tax on such income into 30%. Okay, LLP and all 30%. And HEC at 4%. There is no surcharge here, into 4%. In none of the cases surcharge comes. 9,36,000. Okay, 9,36,000. Okay, whereas in 143(3) it is 12,48,000 and 144,400. Difference for levy of penalty under 270A. Okay, here it is the difference between this and this. Okay, here it is the difference between second assessment and first assessment. Okay, first assessment, difference between 143(3) and income determined under 143(1)A. 143.3 and income determined under 143.1. Second assessment, income determined under second reassessment versus income determined under first assessment. Okay, quantum of penalty 50% of difference of tax. Okay, 50% of difference of tax. This into 50%. This into 50%. Okay, you can நீங்க 10 lakhs tax போட்டாலும் இதான் வரும், but you should not do like this. If the law says use the difference between tax computed on income of assessment versus tax computed under 143(1)(a), tax computed on reassessment versus tax computed on first assessment. So for our time sake, I have done like this, but you should do it separately. But you can follow this format. This will be more useful and clear to the examiner also. Question number 3. Messrs. M&O is a firm liable to tax at 30%. The following are the particulars furnished. As per the return furnished, 50 lakhs, 65 lakhs, 85 lakhs. Okay. So 50 lakhs. Mr. N, a resident individual of the age of 55 and a partner of the above firm, has not furnished his return of income for 2021-22. However, his total income is 15 lakhs. Let's come to this question later. First, let us complete the same question. Okay, almost all these are examination questions. Okay, the examination is going to test you mostly on 270A penalty only. Okay, 270A penalty only. Income determined is 50 lakhs, 65 lakhs, 85 lakhs. 50 lakhs, 65 lakhs. Again, no 1 crore tanada surcharge, so no problem. 85 lakhs. Okay, so the penalty quantum will be 2,34,000 and 3,12,000. Okay, this is like the first question. This is like the first question. I'm not working out. This is like the first question which we worked out. That is this question. Okay, compute the tax and do. Okay, it's a replica of the same question. Okay, age 58 da, so senior citizen la. So same way. Okay, I'm not repeating it. Okay, what would question number 4? This is interesting because what will happen when a loss is reduced or when a loss is converted into profit? Let me write it theoretically first. Okay, question number 4. But before that, before working out the question, where loss is reduced or loss is converted into income, then tax should be computed on what is popularly known as absolute value. What is popularly known as absolute value? You should find out the absolute value. Okay, you should take the absolute value as the income and find out the tax. Okay, whereas loss is converted into income or loss is reduced. இப்போ இந்த கேஸை படிக்கலாம். Okay, 143, 139 we can leave it. 143, 3 lakhs. Okay, underreported income தான். Okay, and it's not on account of misopening. 3 lakhs. 143, 1 lakh. Okay, turnover of 1819, 10 crores. I told you in exam they will always give you. So what happens is, okay, first level assessment, reduction of loss in absolute value. Reduction of loss in absolute value is 2 lakhs. Reduction of loss in absolute value is 2 lakhs. Tax at the rate of 25%. Tax at the rate of 25%. 2 lakhs into 25% and HEC at the rate of 4% and HEC at the rate of 4%. Total tax, okay, 52,000. Total tax 52,000. So even though the loss tax normal, this 52,000 they will not ask you to pay because loss is only reduced. So they will not ask you. Here they will ask you to pay the tax. But in this case, the department will not send you a demand notice. It is only reduction of loss, but they will send you a penalty demand notice. Okay. Quantum of penalty 50% of difference of tax. Here 50% of tax. Okay. This into 50%. 26,000. 26,000. So here the penalty will be levied on absolute value. Okay. In the second level of assessment, what happens? -1 becomes 4 lakhs. In the second level of assessment, what happens is -1 becomes 4 lakhs. Okay. Second level assessment. Okay. Absolute value of loss converted into income. So -1 becomes 4 lakhs. So 5 lakhs is the addition they have made and 65,000 will be the tax. In the second level of assessment, -1 lakh has become 4 lakhs. So under reporting of income comes to 5 lakhs and they will ask you to pay the tax only for 4 lakhs. But when it comes to penalty computation, they will make you pay the penalty for the entire 5 lakhs. So whenever loss is converted into income or loss is reduced, it is to be computed on absolute value. Other than in the question ko answer. This is the same question, okay, theoretical answer, but that is the practical answer. That is the practical answer. Before going into question number 6, for companies, how to compute tax penalty, okay, A plus B, A minus B plus C minus D into 50% or 200%. A, income assessed. B, income under 143 1A. C, book profit under 115 AB assessed. D, okay, book profit under 143 1A. Okay. So actually everything is actually sorry, tax on, ellame tax on, sorry, tax on, tax on, tax on. Okay, A minus B plus C minus D. A plus B, A minus B plus C minus D. I'm sure, but sometimes memory fades. Sometimes every time memory fades. Okay. A minus B plus C minus D. Okay, okay. This is the methodology of computation. With one more small remark, which I will make it later. Okay, now the law. In the case of a domestic company having normal tax rate of 25%, the income returned was 30 lakhs, whereas 115 JB computation amounted to 36 lakh. In the assessment 143.1, this was increased to 35 and 60 due to the different adjustment. Compute the penalty of underreporting. Okay, question number 6. Question number 6. Okay, particulars. Okay, 143.1, 143.3. First, we are working for normal. Okay, normal income. Normal income, it is 30 lakhs, 35 lakhs, 30 lakhs, 35 lakhs. Okay, tax on normal income at 25%, tax at the rate of 25%. Okay, and HEC at 4%. Okay, total. Okay, 7,80,000. Okay, this they call it as A, this they call it as D. Okay, this is A. Okay, tax on income assessed and tax on determined under 143.1. Okay, now the same with regard to book profits. The same with regard to book profits. Okay, book profits. Profits are 36 lakhs and 60 lakhs. 36 lakhs and 60 lakhs. Okay, 36 lakhs, 60 lakhs. It is at 15%. It is at 15%. Okay, it is at 15%. And okay, this they call it as C, this they call it as D. Okay, so please understand these are the important aspects for computation. Okay, now for levy of penalty, what we need A minus B plus C minus D, since they are separate adjustments. Since there are separate adjustments, so 910 minus 780 plus 936 minus 561 600. Okay, under reporting penalty. Okay, 50% of this. Okay, under reporting penalty at 50%. Okay, this is how this has to be computed. So far they have not asked it, I don't know why, but please be sure. Okay, okay, this is how it has to be done. A minus B. Okay, right? If it is ordinary, A minus B தான் நாம பண்றோம். Okay, here one more addition. So it is not something very unique and all. It is we are normally do this only. Okay, now there's a formula they have given. Okay, what is the problem is, if in the above adjustment, into the above question actually, the adjustment made in the normal computation rupees 5 lakh is also carried out in 115 JB. Okay, what will be happening if it is the same adjustment? Here it is, we saw that the different adjustments, separate adjustments. Okay, what if it is the same adjustment? Okay, question number 7. What happens if it is same adjustment in both normal provision and book profit? When will you tax it? No. Okay. The Act says that D will be added with the same adjustment. The Act says this D will be added. Here I will add that adjustment. Here I will add that adjustment. The Act says, my dear friends, remember this, D will be added. What is D? The income computed. Either increase pantena so that this will be increasing automatically. So C minus D will be a lesser amount only. So where the adjustment is for the same aspect, the Act says add D with the same adjustment. For example, in this question, 5 lakhs. Look how the answer changes. Okay. Look how the answer changes. Okay. Right. This is how the answer will change. Okay. If you, okay, 5 lakhs, same adjustment. What they will do is here 36 lakhs plus 5 lakhs. Okay, that is 143.1 will be increased by the same adjustment quantum. Okay, so 5 lakhs. So the penalty will be 213,200 as against 252. So when there is a same adjustment, you have to increase the income in D. You have to increase the income in D so that previously this was, you can see 561,200. So the difference between 936 and 561 is higher. Whereas now it is 639,600. This difference will be shorter. So logically, I will get 25% tax if it is normal. Whereas here I will only get 15% tax. Why should I lose the 10%? So don't pay the book profit for that. Pay me the normal tax penalty for that. That is how this is done. Increase the quantum in D. Okay. Once more, they have not questioned it. Suppose if they questioned it, don't leave it. Just to be confident. Nama D podumbodhu. Okay. Whatever is the common adjustment, increase the quantum in D. Whatever is the quantum common adjustment, increase the quantum in GD. Examine the following statement in the context of the provision contained in various chapters of that. A penalty for concealment can be imposed even in case where the claim of the assessee is debatable or arguable. The assessee who has required to furnish annual information return fails to furnish. Is he liable to? Okay, right. First, this question. A penalty for concealment can be imposed even in case where the claim of assessee is debatable or arguable. Okay, where assessee has gone on an appeal, then the penalty proceedings will be stopped. Stay order will be obtained for penalty proceeding. Where the assessee has not gone on an appeal, even though the issue is debatable, if it is for concealment, penalty can be imposed. What cases penalty cannot be imposed, I will come to that. But if it is for concealment, okay, question number 8. இது முன்னாடி 271C, இப்போ 270A ல இல்ல இந்த question. முன்னாடி, okay, where there is concealment of income, AO can initiate penalty proceedings even if the matter is debatable, where assessee prefers an appeal, then penalty provision can be stayed by the appellate authority. Okay, he will stay the penalty proceedings, but generally AO will initiate. Nama in the recent assessment also, in the faceless assessment also, we saw AO will say initiate penalty proceeding and then hand it over to the respective AO. Assessment unit will levy. Okay, and prosecution be, this is the only time prosecution in this 20 years, only time they have asked the prosecution question. Can prosecution be launched for the following defaults? Examine. Yes, the assessee deliberately failed to comply with the notice. Now there is a faceless assessment, but here, yes, 1 year rigorous imprisonment. 1 year rigorous imprisonment. Assessee failed to deliberately make the payment of tax collected. This is a further violence. 3 years of rigorous imprisonment. 3 years of rigorous imprisonment. Assessee has restrained and not allowed the officer as per section to inspect the books maintained. Okay, raid both they have not allowed the books. 1 year rigorous imprisonment. First one and the third one, 1 year rigorous imprisonment. Second one alone, you are having government money, which you are not supposed to have. 3 years rigorous imprisonment. This is the only time they have asked the prosecution question. Otherwise, prosecution in our material, every time we can get a material, you have to staple it. That's all. Okay. 1 year rigorous imprisonment. Okay. Second case, 3 years rigorous imprisonment. Okay. Last one also 1 year. Okay. Okay. Last year also 1 year rigorous imprisonment. That is the only time. No, don't worry about prosecution. 270A the question. Question number 10. In the course of search operation under 132, Mr. Hari makes a declaration under section 134 on earning income not disclosed in the books of account. Mr. Hari explains the manner in which income was derived and pays tax together with interest. However, he does not disclose such income in the return of income filed on 31/7. Is penalty leviable? Here we are talking about 271 AA penalty. Okay, I have just summarized the penalty proceedings. Time okay, here we are talking about the 271. Sorry. Uh, 30%, 60%, 1 minute. One minute. I forgot the section number. I remember the quantum 30% and then. 271 AAB. Here we are talking about 271. Okay, penalty. Penalty under 271 AAB. In the raid cases. Okay, in the raid cases, this penalty is applicable. Okay, remember, if undisclosed income is admitted during the course of search. If undisclosed income is admitted during the course of search, assessee explains the mode of earning such income. Assessee also explains how he earned such income, pays tax for such income together with interest, and furnishes the return of income for the specified year. Okay, penalty will be 30% of, okay, undisclosed income. 30% of her. Otherwise, it will be 60% of undisclosed income. So in this case, if you look at it, okay, not disclose the, Mr. Hari explains the manner in which however, he does not disclose such income in the return of income filed in 31(7). So it will be 60%. It will be 60%. He has violated this. Okay, one condition he has violated, so it will be 60%. Otherwise, it would have been where it is accepted. Mode of earning is also said, and along with tax and interest, he pays and furnishes it in the return of income. 30% is the penalty, and otherwise 60% is the penalty. Okay, right? They have asked this once. They have asked this once. What are all the penalties in the following circumstances? Failure to maintain books, small quantum only 25,000. Failure to maintain books, small quantum 25,000. Failure to get the books audited, where audit is mandatory, 1,50,000 or 1,50,000 or 1%, 1,50,000 or 0.5% of the turnover, whichever is less. 1,50,000 or 0.5% of the turnover, whichever is less. Failure to maintain books as well as get them audited. இது வந்து ரொம்ப யூனிக்கா ஒரு கேஸ், ஓல்டு கேஸ். You cannot levy two penalties for the same default. You cannot levy two penalties for the same default, so only 25,000. You cannot levy two penalties, either for non-maintenance of book or not. Anyhow, books are not there, so you cannot audit. So you can only levy 25,000. Very, very old case, but still it might be valid. Okay, so 25,000 can only be levied for this. 25,000 can only be levied. Failure to pay the deducted tax at source. Okay, failure to pay the deducted tax at source, sum equal to the amount of tax which he has failed to deduct or failed to pay. Okay, 100% of the amount is the penalty. 271C penalty, 100% of the amount is the penalty. Interest is payable, otherwise penalty can also be initiated 100%. Failure to furnish annual returns. Failure to furnish annual returns. This is a very serious penalty. Okay, this is a very serious penalty nowadays, my dear friends. Okay, where there is a failure to furnish, okay, annual information report before 30th June to ours, to the people, to the, okay, 500 per day, and if you fail to give it to the government, 1,000 per day. This is a serious penalty now, because unless the assessee knows, he cannot declare it as income. REIT, securitization trust, or investment fund, they should tell the assessee how they have earned the income. In the same proportion, it is distributed to the assessee. So 271FA is the one which is going to levy penalty for that. Okay, other than that also misconduct. Okay, there sometimes 5 lakhs is also being levied. This is a very serious offense now. Okay, penalty is very high. Penalty is very high for them. Okay, and last, failure to furnish PAN or Aadhaar where it needs to be furnished. Failure to furnish PAN or Aadhaar, it depends upon what type of transaction. It depends upon what type of transaction we are entering into. Okay, I think 10,000. Yeah, 10,000. Okay, 10,000 for each default. 10,000. If you wherever securities market, car வாங்குறீங்க, jewel வாங்குறீங்க, okay, wherever you have not furnished your comply with the provisions of 139A, 10,000 is the penalty. 10,000 is the penalty, and this is the last. This is last year introduced section. This is this year introduced section. About this, we have done it in our regular amendment lectures. Okay, so the last, that is, this question is again 270A penalty, just like how we work now. This is in your RTP. ABC LLP, same question they have repeat. Okay, filed its return declaring a total income of 18 lakhs. 143.1 is 22 lakhs after disallowing deduction under 10-day delay. Okay, it was an exam question, again repeated. RTP அப்படிதான் பண்றாங்க. Okay, on scrutiny, the income was increased to 35 lakhs. Then on the reassessment, 42 lakhs. It is not due to misreporting. Okay, so under reporting only, what will be the penalty? What will be the penalty? So you know how to work out this. Okay, with this, okay, I believe either 269 SST, SUST or 270A penalties will be one of the questions which they can ask. Otherwise, don't go intricate into the penalty provisions. But I have just given you to just browse through the penalty. In the international taxation penalty, I will deal with it when I am doing the international taxation. This is 2% of transaction value and all. When you are dealing tomorrow morning, okay, I will again repeat these penalty provisions. Okay, right? Except assessment. Faceless assessment, except that small 25 sections. To a larger extent, I have touched upon all the aspects of our study area. To a larger extent, I have touched upon, okay, PGBP, capital gains, firm, companies, charitable trust, individuals, okay, alternative system and all. In the amendment lectures itself, I have touched TDS, TCS, okay, and to a little extent the penalty is also touched upon. Okay, this will be more than sufficient for you with regard to the direct taxation. Out of that 70 marks, okay, I think I'm confident that at least 50 to 55 mark for sure we have touched upon. Probably 60 marks also we have touched upon. Okay, so these lectures, this classroom sessions would have given you the sufficient knowledge for that 70 marks. Okay, the remaining 30 marks is also going to be very crucial. That is where I'm also going to focus upon and take you through. My intention is to make you confident so that you go and get that 20-25 mark out of that 30 mark. Okay, 20-25 there, 35-40 here will make it a good component for you to score that magic 60 marks of exemption. Meet you again tomorrow morning 6 o'clock to start with what is transfer pricing. First session, we want to complete transfer pricing without compromise. At the same time, understanding every nuances and intricacies of transfer pricing, doing some questions also. Meet you 6 a.m. tomorrow morning to discuss on transfer pricing. Thank you, friends. All the very best.
Thank you, sir.